Good afternoon, everybody. Today I'm chatting with Wayne Heili from Peninsula Energy. In this interview, we discuss the positive sentiment change that's happened with uranium. We also get into the market dynamics and where Wayne thinks that uranium could be heading in the relatively near term. We also talk about Peninsula Energy, which to me is a very interesting story because they're a near-term producer who almost got to production in 2023. Then their toll processor effectively walked away and they had to hit the reset button. They did a raise to get 60 million Australian dollars in the door about a month ago, and the stock has responded quite well to that private placement announcement. We also discuss when the company thinks that they can get into production, what the margins could end up looking like, and then we get into what those catalysts and timelines look like for 2024. All right, everybody, enjoy the interview. Wayne, thanks so much for joining us today.
My pleasure. It's great to be on your program.
So let's talk broad uranium to start. From my understanding and from talking pre-interview and looking at your background during our research, it seems like you've dedicated your life to the industry of uranium.
I guess that's one way to put it. Yeah, dedicating. I actually, got a metallurgical engineering degree in 1988, and I went straight into the uranium industry. I found I've been held captive by it. It's always provided for me, and I've had opportunities in down markets, and I've had really nice opportunities in up markets. So now, what is it? It's 2004, and I'm well over 35 years in the industry. It's what I know. It's what I do.
So I'm sure that after all these years, hopefully, you still have reasons when you get up and get out of bed in the morning and you think about uranium that gets you excited. So what's your bull thesis on uranium? If you talk to somebody who, like, let's say is a high net worth individual or runs a family office or hedge fund, and they ask you about the uranium bull thesis, what do you tell them?
Supply and demand fundamentals, historically have not been the perfect indicator of the markets. I came into it in 88, the price was $16 a pound. It slid down to $8 a pound during the next several years, and it wasn't for 16 years actually until around 2004 that it climbed back over that $16 mark. And everybody said supply and demand. It just dictates that the price will go up. But there were externalities. There was the megatons to megawatts program where we converted a bunch of weapons into uranium, and that hurt the fundamentals of the producers. There were other externalities. There was always extra inventory. Today the market is just markedly different than what it was back in those days. We seem to have consumed the surplus inventories. We don't have in mind a secondary source that's viable to make up the gap. And there continues to be a significant gap, supply to demand. So I feel like supply demand fundamentals are going to carry the day and rule the day for quite a while. The other thing that's changed, the thesis, the macro, is that we've gone through a couple of incidents with nuclear reactors, and nuclear's fallen out of favor on a couple of occasions. Today, nuclear is in favor, probably in a way that it's never been in my career, in my lifetime. Everybody is embracing the carbon-free nature of nuclear energy. That means we're creating more demand for more nuclear reactors around the world, and that means more demand for uranium. So in a market that's already supply short, secondary supplies don't seem to be able to make up the gap. What's happening is we're seeing rising price, and it looks like until something happens, that's going to persist. The world needs more uranium mines. It needs more uranium production.
Obviously, you've been in this for decades, and I'm sure that you've seen the swings in sentiment change. How much different is it today versus, say, 5 years ago, when I remember laughing at all the uranium bulls on social media because it felt like every January they'd be like, this is going to be the year of uranium. This is going to be it. And then it was like, you guys have been saying that for 10 years now, since the last bubble. the sentiment clearly, if you go on social media right now, it's all uranium and we got a platform where we talk about small cap stocks. Nothing gets more traction right now than uranium. How different do you find it from your perspective today? And then let's even compare it to the last run there around 2010 or whenever it was, the sentiment back then to today.
Yeah, the previous run, really the uranium renaissance, what was different was that nuclear wasn't being embraced as the energy source that the world wanted to turn to. In during the Renaissance, a period that we said, finally, nuclear is coming back, but uh, guys like me who spent a career producing uranium, often would, be asked, well, what do you do for a living? And I would kind of be an apologist. I'd say, well, I'm a miner. I work in the mining industry. Well, what do you produce? Do I really want to say this? I don't know this person. Today, it's amazing. You go out, you say, hey, I produce uranium. That's my expertise. That's what I do. And people say, oh yeah, we need more of that. I see that we need more of it. The public perception for, the embrace of domestic, and this is now U.S. domestic production of needed commodities and critical minerals, is so different than it was just 5 or 10 years ago. The public understands that we need to have more self-reliance. Maybe that's a function of geopolitics and global instability and wars, but that narrative has come out, and it's landed strongly, and it means that folks like me can now, take what I know and do it, and do it with a confidence in a room that I think the people in the room are generally going to accept and say, I'm glad you're doing that. We need more of that.
So let's get into Peninsula Energy. What's the high level overview for our audience who are new to the story?
Well, Peninsula Energy has a project that the company itself developed from conception to production back in 2015. Was really a turnkey year. 2015, Peninsula put the Lance projects in Wyoming into production. It finished the regulatory process, it finished construction, and late 2015 started production. The company produced it, and that was a bad time in the market. It was 4 years post Fukushima. Most everybody else in the uranium industry, the juniors particularly, were shutting down their facilities because the markets were so poor. But Peninsula was swimming against the tide and putting a project online because it had contracts to fulfill. It had, sales obligations, and they intended to produce to fulfill those sales obligations. So at the Lance projects in Wyoming, the company produced from 2016 until the middle of 2019, when finally we succumbed to the bad markets, and we were able to, we could justify shutting down and putting the project on pause. Now, in the interim, and really, I came on board in 2017. So, there's this a little bit of, I talk about Peninsula, and it's important that there's ownership there. But, I came on board in 2017, and we started pursuing a new pathway for the project. We wanted to change the process chemistry from what is, traditionally used in the United States, which is an alkaline in-situ recovery chemistry. We wanted to embrace what the Kazakhs do, what the Australians do, what other people, the world-leading producers and the lowest cost producers do, and that is a low pH chemistry for in-situ recovery. So back in 2017, late 2017, we kind of introduced that fact to the market. We put some regulatory risk on our own backs because we had to get, for the first time, a commercial project in the United States licensed to produce uranium by low pH chemistry in situ recovery. We succeeded in that, and we traveled the pathway towards resuming production. And really, we believe the low pH chemistry is going to be substantially a real vast improvement in the performance of the project. We've done that in the laboratory. We've shown it in field tests. But we went to the pathway of finally making a production decision that we were going to convert our facilities physically so that we could accommodate the new chemistry set. And we were going to restart the project in 2023, the middle of 2023. Um, Flipping back just a little more insight, back in 2015 when Peninsula was putting the project online and the markets weren't that good, they made some capital efficient decisions. And one of them was to build what we in the industry call a satellite plant. We could capture uranium from the well fields, we could put it on ion exchange resins, but we ship those resins from our facility to another facility for final processing to a sellable product, yellow cake. That's done at a central processing plant. So while licensed to build it, Peninsula made the capital efficient decision to not build a central processing plant back in 2015. That decision was good right up until the middle of last year when it kind of came and bit us. The toll processor, the company that did the extra processes for us, also was looking at a very good market last year and said, we want to reserve that capacity for ourselves now. So they pulled out of our agreement. And that meant that we were not able to start production in 2023 as we had intended. We turned around and made that decision then to build the central processing plant, which we have a license for and approval for. But that delayed the restart of our project in Wyoming from the middle of 23 to probably the end of this year, 2024. That was hardship for the company in the second half of last year. But now we have raised the money. We have the full funding to get the project back into production. And we have the business plan, very public. We look to be a mid-tier uranium producer here in the state of Wyoming for the United States. And by mid-tier, I mean well over 1 million pounds a year. The lower tier folks produce less than 1 million pounds a year. We're looking at production rates around 2 million pounds a year, 1.8 million pounds a year. And we have a license for 3, so we can expand that. But we've always thought very sequentially, and we're going to take one step at a time. But we're looking forward, 2024 now, fully funded, a construction project that we have to keep on time and on budget. But beyond that, the risks are pretty low for us. We look forward to entering production around the end of the year and ramping up to closer to 2 million pounds before the end of the decade.
Okay, so the plan is to get to 2 million pounds of annual production. So you guys had a toll processor who you thought would have you guys started in 2023. That fell through. When are you guys now looking at production, and do you have any sense of what the margins could look like? And secondarily, are you currently locked into any offtake agreements?
That's a lot, to unpack in one question. That's 5, but yeah, we look to be in production after we complete the construction, which should be towards the end of this year. Late fourth quarter is our objective. And we think we can produce over 1 million pounds in 2025 because we have a lot of time to prepare well fields and facilities to do so. So we're gearing up. We have the manpower. We don't have, we have the permits. So, once the construction's done, we go. We have off-take contracts. We have legacy contracts that were signed in the middle of last decade, 2014, 2015, that carried the company forward all this time. We've maintained excellent relationships with the utilities that we have off-take agreements with. We really have multiple utilities, both in the U.S. and Europe, that are taking our product in contracts over the coming years. 2014 is covered, or 2024, is covered. We don't have to worry about deliveries in 2024 when we're not producing. We'll be producing in 2025 and expect to be able to put our product into the contracts that year. But the contracts cover about 1/3 of the production that we foresee for the next 10 years, and the contracts delivery schedules span the next 10 years. So we have offtake over a good period of time. We have a very healthy, financially predictable revenue stream from our contracts. Again, it represents 5 million pounds of 15 million pounds that we expect to produce in the next 10 years. And it's all at a profit. We expect our direct operating costs to be in the $20 a pound range. We expect our all-in sustaining costs, which involves capital and direct operating costs, to be around 40, 42, in the low to mid 40s. And our all-in cost is there. And then our all-in sustaining cost, which is kind of a cradle to grave reflection of the mine, is around $52 a pound. So in today's market, looks pretty good.
Okay. So let's talk about funding. You guys recently completed a 60 million Australian dollar private placement. Do you expect this to get you through most of the equity financing that you're going to need to get to production? How much project financing do you think you're going to need?
Yeah, this equity raise was intended to take us to first production. It was raising enough. We got the 60 million Australian. For your listeners who don't do a lot of currency exchange, there's about 0.65 US dollars to an Australian dollar. So closer to $40 million US raised in this. It was a placement with 50 million going to placees, and then we did another 10 million for our existing shareholders. So they had the opportunity to participate at the same pricing. Fully subscribed and really oversubscribed share purchase plan. Along with the shares and the 60 million that we raised through those two mechanisms, we offered a half option on the shares that they bought. That half option has a potential to bring in 40 million additional dollars. It's in the money. The strike price was 10 cents. Today we closed at 14.5 cents. In fact, really what the market wanted to see was us funded to production, and the market has responded very well to this capital raise. Our share price is almost doubled the strike price or the placement price now, and I think we're on a very strong upward trajectory because we underperformed in 2023 in the second half after failing to get the project into production and after announcing that we needed additional funding. That was overhanging our story. We needed additional funding. The markets knew it. We finally got that done. And we've raised enough money now to put us into first production. And with the exercise of the options, we'll have some additional money that'll carry us through the early days of first production and bring us closer to the point of being at a sustainable free cash flow positive situation, which we think will be third quarter of 2025. So, financially, we're in good position right now to execute our business plan in 2024 and get the project started. And then, we're looking, for a little top up, maybe debt, probably debt. We're looking at U.S. government debt programs. We're looking at other commercial bank debt. We have a financeable asset. We'd like to use debt to complete additional funding, which is required to get us to that point of free cash flow, a mark that every business should be thinking about. It's not enough to just get it in production, and but we're not dropping the pens on getting it to the point of free cash flow. We're continuing to pursue additional funding avenues, hopefully non-dilutive.
How many other companies are this close to being to production in the U.S.? Are we talking like less than half a dozen?
Yeah,
like 20 companies are trying to get there in the next couple of years. Realistically, how many companies do you think could be producing uranium over the next, say, 2 to 3 years?
Well, we have, and I'll go through the list. UR Energy has its Lost Creek project up in Wyoming, here in Wyoming, that they restarted late last year, and they're ramping up production. So we expect to see a fairly decent amount of production out of them in 2024 and going into 2025. Encore Energy has got 2 projects in South Texas that they're working on. One, the Rosita project is said to be running now, and another one, the Alta Mesa project, is said to be close to restart. So they'll try and put some production on the market. Neither of those companies have been very clear about their production guidance, so I can't really say what they're hoping to achieve in production levels in 2024. Another company, UEC, has announced its intentions to restart the Willow Creek operations in Wyoming. They think that they can be ready for a restart around mid-year. Again, no production guidance, so I can't really tell you what they're going to do. The last of them is Energy Fuels. They use their mill in Utah in a number of different ways, but they have resumed mining operations in the Colorado Plateau and in Arizona, so that they can bring some ore to the mill. Again, as best as I could tell, I don't really have production guidance, but Peninsula, we've given production guidance. We hope that in 2025 we can produce over 1 million pounds, 1.1 million pounds, and in our company presentation, there's a production profile for the next 10 years that you can see that we're trying to get to 2 million pounds a year. So at least we have that transparency. We've shared what we're doing. There's really nobody else that's that close to production or that we could put our finger on and say they'll be producing uranium in the United States in the near or midterm.
So it does sound like, and I know that a lot of the uranium bulls watching this are probably about to scream at me, but it sounds like we've got a whole bunch of projects that are coming online relatively soon. Do you think that some of the hysteria that we're seeing on social media about throwing out things like $300 price targets on uranium is a lot of the idea behind this just that we're in this sort of tight bottleneck where the price just has to go up, and it's going to be tremendously bullish in the short run, but in the medium term, these prices aren't really that sustainable?
Yeah. Look, I don't think the U.S. uranium production activity, collectively represents much more than 5 million pounds a year. And the deficit in the markets is 40 to 50 million pounds a year. So we're going to have to turn to a more global look if we want to solve that deficit. Who else in the world is restarting production? There's bigger projects that are planning to get online in Africa. Other projects in Australia that are looking to ramp up. The uranium market now is very supportive of everybody who's been sitting on a uranium production asset. So we're all trying to restart, but collectively, I think the big thesis that it kind of goes back to that earlier question. When you look at supply and demand projections that professionals are giving, the UXCs, the trade techs, they all provide a chart, a forward-looking chart of supply and demand. And everyone to a man, uses secondary supply to help fill the gap between primary production and primary demand in the future. But every one of them also uses their best judgment as to which mines that are identified will be able to produce and succeed, and they include that into their primary production numbers. So every mine that we know of is considered as a potential source for future production, and there's still a gap. That's the big thesis. That's the big wow. And that's why I said the world needs more uranium mines. The work that we're doing here in the United States can be very profitable for the individual companies, but we're not going to, with what we're talking about today, make a very significant dent in the supply-demand picture.
Okay, so last question for you. Any investors who are watching, potential investors, people just following the story, what does 2024 look like? What should they be watching out for to say 2024 was a successful year for Peninsula Energy?
All right. The first piece of information that every investor is given is that past results are not necessarily indicative of future performance. So I'm going to work off of that premise.
Okay.
The first half of 2023, Peninsula Energy was gearing up to be in production in, around the middle of 2023. And we did we were putting investment into getting our project ready to restart. We had one of the best performances in the sector on a share price basis. We were one of the top companies, share price performance, first half of 2023. Right when we were about to pull the trigger and get started, we had that obstacle, the loss of our toll processing agreement. And that really set us back. That put the hurts on our share price. That put the hurts on our investors, and we had to retrench, and we had to fix that problem. We spent the second half of the year, talking about solutions and raising the money to do so. We put this company into one of the best positions it's been in a very long time, which is fully funded to production, with a game plan to become a fully independent producer and of a sellable product, dry yellow cake, which is going to be best for our company in the long run, not relying on other folks who sometimes have proven to be less than fully reliable for us. Anyhow, so what I'm looking at in 2024 now, we take past as the lens, but you look at 2024, we're faced with execution on a construction project. We're going to be building a plant capability and plant capacity. We're expanding our plant. That's the primary goal for our company in 2024, along with preparing well fields for future production. A relatively simple task for a mining company. We have our licenses. We have a lot of the de-risking. We have our manpower. Things are behind us. I understand the market needed us to provide that funding solution. We did that today. That's in the immediate rearview mirror. Our share price is starting to move upward. I think we've unleashed it, and I expect that Peninsula Energy will go from an underperforming second half of last year to a very strong position during the course of this year. Even looking at, as the news flow comes, as we continue to, share the progress of construction, that by the second half of next year, we can be again a sector leader, a real strong performer, and get the valuation re-rate that we haven't seen with the improvement in the price of uranium. We didn't because we were under the gun to solve some problems. We did that. Today, perhaps our share price is unleashed, and Peninsula can now move forward at a pace faster than our peers, and see very good returns.
Well, Wayne, thanks so much for hopping on here. This is a really exciting story. Anybody who's near production right now in uranium is someone who I think that our audience is going to want to be following. So thanks for hopping on here, and hopefully you'll come back on in the future as the story continues to unfold and develop.
No, I appreciate the invitation to share our story and to chat with you. You guys continue the good work.
Thanks, Wayne. All right, everybody. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.